Yes. So good morning, my dear friends. It is sharp 10:05 and we are starting our session over here. And today we are going to understand altogether a fantastic learning on smart wealth creation ideas, that how we can generate good wealth with complete safety. So we are going to understand the concept called index long-term strategy. So our objective of next 45 minutes is that we will understand that how long-term investments can be done using indexes, how we can get safety against market fall. The third point, we will understand that how equity with safety can make prosperity. The fourth point, we will understand that is benefit of leverage, that how we can use leverage in our investment. And finally, we will understand index long-term strategy. We are from FinIdeas, investment के ideas मतलब FinIdeas. We are SEBI registered investment advisor, and the disclaimer is that equity investments are subject to market risk. So kindly consult your financial advisor before having any kind of investments. We are SEBI registered investment advisor dealing with more than 75 direct members of exchange. We are 26th company in India to get approved our algorithms with NSE, and we have trained more than 20,000 traders and investors till date. The mission of FinIdeas is providing transparent solution to everyone for achieving financial freedom. And the vision of FinIdeas is that FinIdeas will manage wealth of rupees 6,000 crores and serve HNIs and members of exchange globally by 31st March 2023. Friends, we are already having our global presence in these three countries, India, Dubai, and USA, as well as in rest 11 locations. So if you want to have any kind of local support, you can get from all these locations. And during this lockdown period, we have done almost 97, in fact 98 webinars till now. Almost 18,000 plus people have registered, around 11,500 people have attended the program, and around 22.5 crore new fund we have added during this lockdown period. The reason to show this slide to you is that whatever business you guys are having, you can use technology in your business and your business can prosper like anything. So now let us understand that how exactly index long-term strategy works. My dear friends, when we talk about investment, obviously we need to talk about properties because they are the most usable as well as important part of the investment. So why people are investing money in property? Because they are getting two kind of confidence in property. Number one, that property cannot become zero, and number two, that if we can hold it, then sooner or later property prices rises. But when we talk about equity, we don't get that kind of confidence. It happens that if we select some wrong stock, it may become zero. So that means indirectly we are having high risk in equity, as well as returns are also high in equity. But our target was not to take that kind of high risk. Try to understand. This is a very important topic to understand. It will clear your concept that how you can generate good wealth with very low risk. So when we talk about equity, we are having high risk as well as high return. So we were not interested to take this kind of high risk. So we have taken two decisions. Decision number one, that we are not going to trade individual equities, no direct equities. And the decision number two, that we will trade only and only indexes. My dear friends, in India, we are having around two exchanges, Bombay Stock Exchange and National Stock Exchange. The index name of Bombay Stock Exchange is Sensex, and the index name of National Stock Exchange is Nifty. So what exactly the Nifty is? Nifty is the average of top 50 stocks of India. Try to understand. This is very important. It is the average of top 50 stocks of India on the basis of free float market capitalization. That means that as of now, we are having Reliance, HDFC Bank, TCS, all these stocks in Nifty. But before some time, we were having Satyam, Marcom, all these stocks also in Nifty. But as soon as the valuation of those stocks reached to 51 number, they automatically moved out and some new stocks came in. So my dear friends, if Nifty is the average of top 50 stocks of India, So indirectly, we are getting the surety that index cannot become zero. Yes or no? So you can participate on chat that if index is the average of top 50 stocks of India, and if the stocks which is reached to 51 number, they automatically moved out and new stocks comes in. So indirectly, we are getting the surety that index cannot become zero. Yes or no? Very nice. So we are indirectly getting the surety that index cannot become zero because it is the average of top 50 stocks. And now how exactly index get calculated? So the valuation of Reliance before some time was around 9 lakh crore. HDFC Bank was around 8 lakh crore. So if we total the total 50 stocks valuation, it was around 90 lakh crore. And this 90 lakh crore was equal to 12,000. What does it mean, my dear friends? It indirectly means that if price of Reliance increases, the value of company will increase, the total will increase, and the index will increase. And the same rule is applicable when market is falling down. So the smart question to all of you is that if the richest company of India is having the valuation above 9 lakh crore today, if the richest company of India is having the valuation about 9 lakh crore today, so after 5 years, 10 years, 15, 20 years, so in future, whoever will be the richest company of India, that should have the valuation above 9 lakh crore. So in future, the superpower of India will have the valuation above 9 lakh crore. So automatically the top 50 stocks jointly will have the valuation above 90 lakh crore and the index will be above 12,000. What is the learning? The learning is that the quality what we were getting from property, that it can never become zero and sooner or later it rises. Both the quality we are getting from the index also. Because index is the average of top 50 stocks of India, so it cannot become zero. And because it is directly related with the market capitalization of the stock, so that is why sooner or later it rises. Friends, this is a very small as well as a simple learning, but it can make crores in your account, because ultimately if we can get confidence on our investment that whatever I have invested in stock market, now either it will go up or it will go up. It cannot become zero. So if I can hold it, definitely I am going to get the appreciation. So now I am having a very small question to all of you, that have you done any kind of investments in equity or mutual fund till date? So the question is on your screen. You can click on yes or no. If you have done any kind of investment in equity or mutual fund, click on yes. And if you haven't done any kind of investment, click on no. So last 3 seconds, 3, 2, 1, and 0. And I am very happy to share that almost 100% people have done some kind of investments in equities and mutual funds. So it is making a lot of sense for us. Because if you guys have already done some investments, then it will become very easy for you to understand the complete strategy. So now let us move toward the part number 2. And the part number 2 is equity plus safety is equal to prosperity. That indirectly means that how we can add safety in our equities, and how we can add or we can generate prosperity by adding equity and safety. So my dear friends, as like others, we are going to invest money first in equity, and for us equity means index. So we will buy Nifty index. Suppose the price of index is running at 10,000. So we will pay 10,000 and we will get the delivery of index. And simultaneously at the same moment, we will buy the put option of index. That means the protection. So if we check the price of last 5 years average, then the premium price of annual put is around 5%. So that means indirectly we need to pay 500 rupee more. So people who are directly investing money in index, the cost for them is 10,000, but cost for us is 10,500, because we are taking protection also. But this protection, additional protection, is giving us the surety that because of any reason, if market falls down, then my 10,000 is going to remain protected. It is very important. So it is showing me that if I add the 5% premium with my investment, indirectly I am getting the surety that my 10,000 is going to remain protected. So that means that indirectly, if we have invested 1 crore rupee in stock market, then in any case, in full 1 year, my 1 crore can never go below 95 lakhs. Yes or no? Come on. Yes or no? Are you getting this, my dear friends? The more you are going to participate, the more you are going to learn. And the more you will learn, the more you are going to earn. Very nice. Very nice. So that indirectly means that I have got downside protection also, as well as I have got the surety that now I am going to earn upside and I am not going to lose downside. So the next point is that what can be the worst case scenario for me? So the worst case scenario for me is that if because of any reason market remains at same level, then the protection cost I am going to lose. For example, in 2020, suppose the market is running near to 10,000. We have crossed 4 years and we have reached to 2024, but market has remained to 10,000 level only. So that indirectly means that if market remains at the same level for 4 years, then I am going to lose the premium what I have paid for against the protection. In between 2021, 22, 23, market has gone up from 10,000 to 12,000. But again, it has fallen down to 8,000. Market has again gone up to 12,000, but again has fallen down to 10,000. Suppose you have invested 1 crore rupee. My dear friend, this is the most important slide. If you can participate it over here, you are going to understand altogether a fantastic learning over here. So if you have invested rupees 1 crore and market has gone up from 10,000 to 12,000. So against 1 crore, you need to pay protection cost of 5 lakhs. Market has gone up by 20%. My question to all of you is that what will be the value of your portfolio? If market has gone up by 20%, your 1 crore will become, come on, how much? Everyone. The more you are going to participate, the more you are going to learn. Very nice. So if market moves up by 20%, then your 1 crore will become 1.2 crore. And again, you need to pay hedging cost. Next year, market has fallen down from 12,000 to 8,000, like in Corona time. So if market has fallen down from 12 to 8, so 1/3 market has fallen down, your portfolio of 1.2 crore will become, come on, at what level you will reach? Your 1.2 crore portfolio will, yes, everyone. So your 1.2 crore portfolio will remain constant. Friends, this is the beauty of this product. We are paying this additional protection cost. Why? We are paying this additional protection cost just because of this kind of scenario only, that whenever market falls down, my portfolio should not fall down. Why? So ultimately, as Rajnath is saying, so your portfolio value must have reached to 80 lakhs. But this protection will give you 40 lakhs rupee back. Yes or no? Because you have bought the put option, and put option is giving you the surety that if market will fall down, then you will get the amount back. Yes or no? So ultimately 40 lakhs rupee you will get from the put option. 80 lakhs will be your portfolio. So your total value will remain to 1.2 crore only. And the 40 lakhs what you have received from put option, that you are going to reinvest. So your number of equity will increase while your portfolio will remain constant. So my dear friends, market has fallen down, but your portfolio will remain to 1.2 crore. Again, you have paid 6 lakh rupee. Next year, market has gone up from 8,000 to it has moved to 12,000. That means market has gone up by 50%. What will be the value of your portfolio? Come on. What will be the value of your portfolio? Market has gone up by 50%. At 8,000, your portfolio valuation was 1.2 crore. Now at 12,000, what will be the value of your portfolio? Come on, everyone. Yes. So your 8,000, at 8,000, your portfolio valuation was 1.2 crore. Market has reached to 12,000. That means market has moved up by 50%. So your portfolio valuation will also increase to 1.8 crore. Again, you have paid 9 lakhs rupee against protection cost, but market has fallen down, but your portfolio will remain constant. What is the learning? My dear friend, the greatest learning over here is that whenever market is rising, you are also rising. But whenever market is falling, you are not falling. And next year again market is rising and you are again rising. Why? Because you have bought the protection. So this protection is not the cost. Actually, it is giving us the added advantage that whenever market will rise, I will rise. Whenever market will fall, I will not fall. And again, if market rise, then I will again rise. So in 4 years, market remained constant from 10 to 10 only. But your portfolio of 1 crore has reached to 1.8 crore because of these protections. You have paid this protection cost 9 plus 6, 15 plus 6, 21 plus 5, 26 lakhs. So ultimately, you are not going to receive 1.8 crore, rather you will receive 1.54 crore. But the learning was that market remained constant. Still, we have generated good growth. My dear friend, this was the hypothetical example. Let us come to the real example. In last 17 years, index has gone up by 12 times. But people who have invested money in this kind of strategy have made 17 times money. On the risk side, index has shown the risk beyond 50% in a year. But you have never witnessed the risk above 5% in your strategy. So you have reduced the risk of your portfolio as well as you have enhanced the returns of your portfolio. So people who speak that higher the risk, higher the return, we don't believe in that. We believe in that the smart calculation makes high returns. And here we have chosen two smartness. Smartness number one, that always trade in index. And smartness number two is that always take hedges. That means always take protection. This protection is not the cost for you. It is like buying a mediclaim. You buy mediclaim, so you get the surety that now you don't have to pay additional money to hospital. Suppose nobody get ill in this year, so your premium will go. Next year again it has gone. Next third year again it has gone. But fourth year, if some of your family member goes to hospital, the premium what you have paid in last 3-4 years, you are going to recollect all the amount in one shot. So indirectly that mediclaim is not the cost for me. That indirectly reduces my cost in the next years. So Mr. Warren Buffett, as of now, he is 90 years old and the great and the wisdom of wealth creation, he is having very good wisdom. And he is summarizing his all the wisdom in 2 lines. That there are only 2 rules of investment. Rule number 1, never lose money. Rule number 1 is never lose money. And rule number 2, never forget rule number 1. My dear friends, try to understand. The person who have made billions in stock market, and if he is summarizing his skill, that the rules in stock market should run like that, we should never lose money. That means this is our own responsibility to protect our own portfolio. So now let us come towards that how exactly we can use this strategy in practical market. So in practical market, I am taking the example of 1 crore. So suppose you are having 1 crore rupee with you and you want to invest this money in stock market. So make 2 checks, 30 lakhs and 70 lakhs. So 30 lakhs and 70 lakhs. 30 lakhs we will park in equity indexes and 70 lakhs we will park in debt. So 30 lakhs we will buy index ETFs and
फ्रेंड्स 2 मिनट प्लीज वेट कीजिएगा, उनका नेट साथ डिस्कनेक्ट हुआ है, वो 2 मिनट में वापस आ जाएंगे. थैंक यू.
You have bought that. You have paid 30 lakhs from your own account and you have taken 70 lakhs loan. So ultimately you have got the total property of 1 crore by investing 30 lakhs from your own account. But now if the value goes increases, then you are going to earn on full 1 crore. And if the value falls down, then you are going to lose on 1 crore. I don't want to lose on 1 crore, so I will buy the protection. So I will pay the 5%. But as soon as I pay the 5 lakh rupee, immediately I will get the assurance that now my complete 1 crore portfolio will remain constant. Yes or no, my dear friends? Come on, everyone. So because I have paid this protection cost, so the 30 lakhs what I have invested, that is also protected, and 70 lakhs what I have bought as futures, that is also protected. So my complete portfolio of 1 crore will remain protected. And if market rises, then I am going to earn on full 1 crore. One additional cost I need to pay, that is financing cost. Why? Because you have made the portfolio 1 crore while you have invested 30 lakhs only. So the rest 70 lakhs we have used futures. So for futures we need to pay forwarding cost. The best point is that we are getting future forwarding cost at rupees 5%. That is 5% a year only. My dear friends, in India, if we are getting the funds at 5% a year, so definitely we should take that fund and we should park our own 70 lakhs in debt. And that is why we have parked the 70 lakhs in debt, because we are getting the funds at 5% cost. And easily we can generate 7% from the debt. So indirectly we are outperforming by 2%. So here we have just paid on 70 lakhs 5% cost. That means just negligible 3.5 lakh rupee we have paid against financing cost. And we have got 70 lakhs rupees fund for 1 year to invest. So that means the total cost for me will become 8.5 lakhs. And this 8.5 lakh rupee cost will give me the two confidence. Confidence number one, that my complete fund is protected. And the confidence number two is that I have invested 30 lakhs. Why I am going to generate returns on full 1 crore. So I have got the benefit of financing. So now the rest 70 lakhs is remaining with us. What will we do of that amount? So we will invest that amount in debt. Ultimately, my target was to make the portfolio of 1 crore. I was having 1 crore rupee with me. I have invested 30 lakhs and made the portfolio of 1 crore. So my target has achieved. Rest 70 lakhs, that is idle money with me. I will park that in debt. So in debt, I am going to generate the return of 5 lakh rupee as interest. So that means I am again going to get back 5 lakh rupee from interest income. So my total net cost is just rupees 3.5 lakh rupee. My dear friend, this is very important to understand. Ultimately, this indirectly says that if market falls down, then your maximum loss is 3.5 lakhs only, or indirectly 3.5% only. And if market rises, then you are going to generate returns on full 100% exposure. So you on upper side, you are making the similar money what you are generating in other investments like equities and mutual funds. But on downside, you are almost protected. We can reduce this cost further. How? So here we have invested this amount at 7% a year. But suppose some of you are already having some loans, car loan, housing loan, any other business loan, CC, term loan, any kind of loan. And if you are paying the interest of 9 to 10% over there, then you can repay your debt. Your target was to make the portfolio of 1 crore. And you have made that by investing 30 lakhs. So rest 70 lakhs, you can repay your loan. So indirectly, you are going to save the interest at 9%. So if you are going to save the interest at 9%, so your income will be little bit higher. So your cost will be automatically get lower. So that plan is called basic plan. So in basic plan, we will put the money somewhere else where we can generate 9% return. So our interest income will be 6.3 lakhs. So now my cost will be 2.2 lakhs. Friend, the first plan what we understood, that was the relax plan. Why the name of that plan was relax plan? Because we were relaxed. We were generating 7% from debt. Rest 8.5 lakh rupee cost is giving us the surety. The downside we are protected and we are getting the advantage of financing. So that plan name was relax plan. But again, we moved towards the relax to basic plan by putting our rest 70 lakhs somewhere else where we can generate little bit higher return, or we can save our interest cost. So by that way, we have reduced our cost to 2.2 lakhs. Now, the third plan is called power booster plan. What exactly the name of power booster plan we have put over here? We can use the power of our own existing equities and mutual funds. So if you are already having investments in equities and mutual funds, then you can use this plan. So how exactly? See, ultimately we have invested 30 lakhs rupee to buy the index ETF so that we can put it as a collateral. And on the collateral, we can buy 70 lakhs future. So for collateral, if you are already having some stocks, equities and mutual fund with you, then you can use those amount as collateral. So that means that now we will not invest 30 lakhs over here. Rather, we will use 30 lakhs rupees stocks. Stocks means your existing equities or mutual funds. and we will put that amount as collateral, and on the basis of those collateral we will buy the futures of full 100 lakhs now. So that means again we have made the portfolio of 1 crore. Now again I want to protect it, so I will buy the protection by paying 5 lakh rupee pay cost, and rest cost is financing cost. This time, because I have not invested any money, I have bought all the amount as futures only, so I need to pay financing cost on full 100 lakhs instead of 70 lakhs. So my cost will be 5 lakhs. So my total cost will be, instead of 8.5 lakh, it is 10 lakhs now. But this is the 10 lakhs amount that I have invested. So for portfolio 1 crore, you have invested just 10% amount. Rest 90% amount you will put as debt. So you are going to generate the interest income from that, and that interest income will be 8.1 lakhs. So now your cost is 1.9% only. My dear friends, what is the learning? The learning is that you can use your own money also. You can use your money at somewhere else by repaying your debts. Or third plan is that you can use your equities or mutual funds also to make new investment. So by that way, you can use the extraordinary efficient funds at your end. So my dear friends, people who have invested this kind of investment since 2002, so index has gone up from 1100 to 12,000, so around 11 times. But people who have invested 1 crore rupee in 2002 has reached to 18.5 crore now. My dear friend, market has gone up by 11 times, while you have gone up by 18.5 times. Why? Because when market is increasing by 71%, you are also generating 68% return. But when market falls down by 52%, your maximum risk is 4% only. That is also after considering protection cost, after considering financing cost, and after considering the advisory fee of FinIdeas. So all the cost we have considered. After considering this cost, your max loss is 4% only. So in last 17 years, you have never witnessed the risk beyond 4%, while you have generated returns around 18.90%. What does it mean, my dear friend? Last 17 years CAGR on full 1 crore is around 19%. Now the question will come that what will be the minimum investment in this kind of product? So the minimum investment is that you can start this kind of investment with 1 lot also. So in Nifty, we are having the lot size of 75. The price of Nifty is around 11,500. So the lot size will be around 8,50,000. That means the minimum property size or the minimum lot size is around 8.5 lakhs that we need to invest. But amount, how much I need to invest from my account? So we are having all the 3 plans. We can use relax plan and we will put full 100% investment. In basic plan, we can invest only 30%, and rest 70% we can use somewhere else. And in power booster, we need to invest only 10%, and rest 90% we can put on debt. So that indirectly means that how much check you need to write. So if you want to invest in relax plan, then you need to invest full 8.5 lakhs. If you want to opt for basic plan, then you can invest 2.5 lakhs. And for power booster, you need to invest only 1 lakh rupee around. But in power booster, we will use our current stocks and mutual funds also of rupees 2,50,000. So my dear friend, that means that a very small investment can also make sense for us in longer run. And the golden point is that all the investments are going to happen in your own account at your end. So you don't have to put your money to somebody else. You need to put your investment in your Demat account only. So what exactly FinIdeas will charge? If you take the advisory from FinIdeas, so below 1 crore portfolio, we will charge 1.5% only. If you reach to 1 crore, then again we will reduce the cost to 1.25%. And when you reach to 5 crore, then your portfolio, then your fee will reduce to 1%. Friends, if we compare this fee with somebody else, suppose in mutual funds, if we invest through advisors, then our annual cost comes near to 1.75 to 2%. In PMS, we are paying around 2.5 to 3% with revenue sharing. While in index long-term strategy, our average cost of investment or our average cost is 1.25% only. Because when we reach to 1 crore, the cost comes to 1.25%. So my dear friends, if you compare it with the other advisors, you will find that we are among one of the lowest fee charging company. Why we charge low cost? There are two reasons. We want to provide financial freedom to everybody else. So that indirectly means that we need to ensure that our clients should make money. So if their cost will be lower, they are going to generate good returns. And secondly, our cost is also very low. Why? Because we don't have to do the research of individual companies. We are investing money in index. So we don't have to focus, or we don't have to check each and every company. So that means our research cost is very low. So that is why we can charge less to our clients. Friends, if we make this portfolio, and if we compare this with equity and mutual fund, suppose you want to make the portfolio of 8.5 lakh rupee in equity mutual fund, then you are investing full 8.5 lakh rupee over there. In index long term also, you can invest full 8.5 lakh. So your amount of investment is similar. If market rises by 100%, then your equity mutual fund or PMS of 8.5 lakh will become 17 lakhs. Here also your fund will become almost 17 lakhs. So again, you are going to generate similar returns upside. But when market falls down by 50%, your 8.5 lakh portfolio will become 4.25. While your 8.5 lakh portfolio will never go below 8.15. So that means the downside you have reduced the risk. Upside you are almost making the similar returns, and investments is again the similar amount. So it is giving you the extra advantage. So for the summary, if we make the investment in 8.5 lakhs, the minimum investment will be 8.5 lakhs for relax plan. We are going to generate the returns on 8.5 lakhs. Our annual cost will be around 30,000, 35,000. While in basic plan, you are going to invest 2.5 lakhs only. But still you are going to generate returns on 8.5 lakhs. Your cost will be 8.5%, so that is around 72,000. But you are going to save the interest on 6 lakhs because you have made the portfolio of 8.5 lakhs while you have invested 2.5 lakhs only. So you are saving the returns or interest on 6 lakhs. So that saving of interest will be 54,000. So your net cost will be around 18,000. In Power Booster plan, you are investing around 1 lakh rupee only, while you are making the portfolio of 8.5 lakhs. So now your cost will be around 85,000, but you are saving the interest on 7 lakh 65,000. That is the interest amount around 69,000. So your net cost is around 16,000. Friends, it doesn't mean that Power Booster is the lowest cost charging product or the Relax plan is high cost charging. Almost all the products are having the similar cost. In Relax plan, we have considered the interest income at 7%. While in basic plan, we assume that if you are investing that amount somewhere else, so you are saving interest at 9%. And that is why the difference is. So if in Relax plan, you can generate the interest at 9%, then the cost will come over here also around 18,000 only for full 1 year. So what features we have seen till now? So the overall features are that this is the combination of equities and futures, completely downside protected. We are investing money in index, so that is why we are having low risk profile. Track record of past is super solid. We can have the live back office with us. So we are having live back office, so you can get the live access. You can see on daily basis that how much amount you have earned or lost, what is your returns, what are your investments, what is your net liquidation value. If you square off all the position, how much money you are going to get back. We can have systematic withdrawal plan also with this. There is no lock-in period. Whenever you want to enter, you can enter, and whenever you want to exit, you can exit. But the logical period of investment is around 5 to 10 years. We recommend. We are having complete dedicated team with us who can provide you systematic advisory. And finally, you can have your retirement or education or higher education kids wedding plans through this kind of investment. And the golden line is that all the investments are going to happen in your own account, my dear friends. So you are going to trade in your own account, so your money will remain with you only. Friends, I hope that you must have liked this product. If you want to know further more about this strategy, then just click on the link I have given over here on chat. You can fill up the form. As soon as we receive your form, we immediately come to know that you want to know more about this product. So our team will get in touch with you. They will advise you. The form will look like this. So you can fill up the form right now also. Just click over here on the link. Click on the link. So when you click on the link, you will get this form. Write down your name, your last name, your email ID, your mobile number, and these questions. What is around your annual income? How much time you need to invest? What kind of risk you want to take? Whether you are having any interest in this strategy or not. And as soon as you fill up this form, our team will get in touch with you. The second point is that you can proceed further for the KYC. My dear friends, we should do this. This is the highly recommended thing. SEBI has given this the mandatory aspect that complete your KYC before having any kind of investments. So if you complete your KYC, we can give you the personal advice that in what plan you should select, how much money you should invest, so that you can do. If you are having any kind of question answers, you can ask us. Meanwhile, you write the questions. I am just updating you that why you should choose FinIdeas, because we are SEBI registered investment advisor. We are having complete infrastructure online with us. We are having the experience of more than 18 years in this equity and options market. And we are the 26th company in India to register our algorithm with exchange. So we can provide you speed, accuracy, and consistency. When you complete your KYC, you will get the live access to the investment planning portal. You can put your own data and you can get the information online only. Friends, we are having the futures and options learning portal also. So we have launched 2 webinar programs in Hindi as well as in English to explain you that why people should use futures and options market, what exactly the futures and options market are. So if you want to opt for that, then today we are having the second session in Hindi, and next Saturday and Sunday, we will have the complete program in English. So if you want to select the English language program, this is completely free. In the investment of these 4 hours, these 4 hours will explain you that what exactly the futures and options are, why they are useful, when they become risky, how to invest in this market, what exactly will become my payoff and break-evens. Friends, the program what you have attended, we are having the repeat session every Thursday 4 p.m. and every Sunday 10 a.m. Like today is Sunday. So we have done this program at sharp 10 a.m. And every Thursday we are having in evening 4 p.m. So if you want your friends and relatives to attend this program, then you can send the link to them also. Friends, if you like this program, then we will need your small review also. So kindly give us your small review. I am just giving you the link of review. So now the link has come to your screen. Kindly give us a small review. We will love to read your reviews over there. And many times we provide different kind of benefits to people who provide us the reviews. So we will love it. We are thankful to all our partners who are promoting these strategies as well as financial freedom skill to throughout the worldwide. So we are thankful to all the partners and all the supporters. My dear friends, if you are having any questions, you can ask me. I will be very happy to give you the answers. I hope that you must have clicked on the Google review link and you will write small review for us. If you want to know further, then you can give us the WhatsApp at 937498560. So our team will help you out. Once again, we are thankful to all of you that you have given your time and you have attended this program and you have learned how exactly equity plus safety can create prosperity. I hope that we have given you the value for money and you have used your time effectively. So thank you once again. We are completing our session on time. So this is exactly 10:45. We have completed our session now. So once again, thank you everyone. Thank you. Bye-bye. We will meet soon again. Bye-bye.